go and look at these entries again, just so you can see what to look for when you're in the London kill zone area. Again, that's 2 o'clock Eastern to 6 o'clock Eastern. New York is 7 o'clock to 11 o'clock. What you're waiting for, you're not waiting for price to move. You're waiting for price to actually take out the high or the low, because that's when it's showing you its hands. All right. So it takes out that high there. Again, here's the up candle right there. Now, I'm going to show you the risky move again, and I'm going to show you the conservative move if you want to be a little bit safer. All right. When a little bit safer, I'll show you that as well, because I understand. I understand that you need to be safe. I need to, where's my trash can at? Okay. So, oh, there we go. Get rid of these. Now, so once again, price comes up above this Asian high. This is the last up candle before price moves down. Now, here's the aggressive, taking it by the horns situation, right? We're waiting for price. We're waiting for the opening of this candle right here to be violated. It doesn't have to be closed beneath it or closed underneath it, just violated. So price comes down right here. It comes down here, but doesn't necessarily close below. So price comes down under here and it actually trades underneath it. So now, what are we waiting for now? We're waiting to see how this candle closes. It doesn't have to close underneath it, but we do need it to close. Well, I need this because this is, my strategy. I need this to close bearish compared to this candle. Right now, both of these candles are still lower than this one. This one closed underneath, but it didn't trade underneath, right? This one traded underneath, and now we need to see if it's going to close underneath. Once this closes underneath, then we take the trade, right? Now, we take the trade, grab our fib, because the fib is your friend. Now, mind you, this hasn't happened yet, so we're going from, there's two ways you can do it, okay? You can do it here, where you go, where this is your dealing range. Now, this is super risky. You can do it though, right? Measure from the bottom of, or from the top of this candle to the bottom of this one, and your stop loss would, in this situation, go here, right? It would go here. That's one way to do it. Another way is to measure from the bottom of this move. This is a little bit more conservative, actually a lot more conservative. Still not conservative, but it's a lot more conservative. Because at the end of the day, you don't want to just be taking a whole lot of L's, even though the wins are pretty nice, right? But so price trades on here, it closes. Now, your TP, so here's your stop loss here. Your initial TP is going to be, because of the first trade, you go for here, right? This is your TP. And the reason why is because you're going to use this trade. I call this the run and shoot, because you're using this trade to actually fund your future trades. All right. So this isn't a trade, I'm done, let's go home situation. If that's the case, then you go for a bigger target. But we're going for here on this first trade. Okay. But as you can see, we get in here. So this is the entry. After this trade closes, you enter. because it didn't close above here. So you enter there, stop loss at the 110 right here. If you want, you can make it a bigger one. It's completely up to you. It's your account, right? So it's completely up to you. Stop loss here. Now, what happens? Price goes down. We're good to go. Now at this point, when it gets down to here, when price gets down to here, you've actually already cleared more than 1%. If you're risking 1%. You cleared 1.27% right there if you want to close it, because you don't need all that. That's just my entry, right? So my entry, oops, let me fix that. So my entry here, target is there. Once it goes down here and starts pulling back, then you basically make the call. Do you want to go ahead and take the L, or do you want to get the profits there? Now, I'm not afraid to take a L, right? So mine actually hit the stop loss. Yeah, it sounded like that too. Maybe it didn't sound like that. But so hit the stop loss. But as I said before, at the end of the day, I'm stopping once my account has lost 3%. Once my account has lost 3%, that's when I'm done. Or when I hit whatever my target is, my target for the day. All right, so this is not 3% that I'm risking here, right? Just to let you know that. That's why. Just to let you know that this is not 3% that I'm risking. So that means that I can still trade. So as this snatched that, it starts coming back down. Perfect entry, right? So now we enter in a second time as price is coming down. Stop loss just above the wick of this. If you want to be safe, you can give yourself a 10 pip stop loss, but my TP is here, right? You can go here. At the top of that right there, you can go there, top of this, just in case it decides to come back. But here's the cool part. You lost 1%. Now with this, you're up 3.8%. You're up 4.8%. Now you're up 3.8% because you recovered from that loss. Boom, right there, right? So TP hits there, or you can go for the midnight candle. There's your midnight candle right there. That can be your target. If that's the case, 5.98%, right? You can go to the previous day's midnight candle, which is right there. But as your first trade, I recommend that you don't get greedy. You can go to yesterday's 1800 candle, which is right there. And it did go to all those places. But what I recommend is when you see that you're chilling right here with 4.83%, go ahead and close the trade, right? Close the trade or take part of it or whatever. I like to close my trades, especially if it's the first one. If I haven't won yet and it's the first one, I like to close that trade because now I can actually risk part of those profits. So I'm closing the trade once we get here, right? Because if you look at it, remember we talked about this 23 level being the TP, being the target, or the TP. Watch. If we go from the top of that wick right there to, let's say, the midnight candle right here. There's your 23. Look at that. Like magic. Or it hits the top of that deal right there, right? But you get out. You get out. And when you get out, you can look for another opportunity because you have money to use. So you're up 4.3, you're up 3.83% because you lost 1% on that trade. You're up 3.83% here. Okay. So now price comes back up, and here's what you're doing. Now pull that down from this point. Price comes back up in here. Look where it is. It's inside your price is inside your area. That optimal area right there. Right at the 62. Now you can actually bring it down if you want to, back to this level here, or you can bring it to here, right? Now this is a wide open area right here. Prime for the taking. Price doesn't quite get there. It gets here. You can put the stop loss just above that if you want, right? So you can put the stop loss just above this area here, because if price comes above here, then it's not our setup anyway. So you put your stop loss right above here. Let me go ahead and erase. Yeah, right above here. Entry here. Stop loss goes just above this candle right here. 7.8 pips. Right, where's your target? Now your target is going to be here. We're going to go for this low. 1800 candle still hadn't been hit at this particular time. So you can go for the 1800 candle, right? So let's say you just go for the 1800 candle, but here's what you have. The benefit of having closed this trade here is now you can risk 3% on a trade, or you can risk 2%. You're up 3.83%. You can risk 3% and still be up 0.83 if you lose, right? And you can risk 3% on 3 different trades, or 3% and just take 1% every time price hits a little section, right? But look what happens. You end up with 4.92% return just for it hitting this section right here. Just for it hitting here, right? We're still in London. Still in London, right? Price comes back, keeps going. You can leave the runner because another target is this Asian low. This is the low of Asia right here. That's another target. Right? Let it run down there. It's all about, so underneath those lows right there, there goes some more lows right there. What else we got over here that we can target after? Because once you know that it's turned into a hunt for lows, then you just start taking out lows. Those are your targets now. Boom, boom, boom. And then here goes this big long liquidity area right here. Right, look at all that liquidity that needs to be mitigated. It needs to be made up for. All that happened in the previous New York session is just sitting there, just untouched. It got it all, right? But now before that, look what happens. So you're up, so you hit your TPs, you got your 4.8, you got your negative 1% plus your 4.83% plus the, well, it's not 6.9, this is actually, you risked 3%, so that's 18% return you got right there. You could be done for the day. Life is good. Or you can come down here, we're getting close to the end of the London session. And what happens close to the end of the London session, this is the reason why I had you mark it from 2 to 5 and not 2 until noon, because the biggest move happens in the London kill zone area. And then there's a false move that happens, right? There's a fake move that happens that likes to fool you into thinking that it's going to turn around, right? But if you measure from here to here, look what you see. So measure from here to here. And we talk about those optimal trade areas, the 62, the 70.5, 79, 88. Well, look where price came to right here, right? Look where price came to. I mean, you can't make this up. Price trades right into this area right here. So underneath here, price came underneath, broke through this low, came down, came back up in here. You can trade that down, right? But what I want to show you is while this is down, and you know this is a possible target, look where it came to. Came right back to that 1800 candle. Yesterday's 1800 candle, this came down to, boom, a magnet for it right there, right? But look what happens. Look what happens. I told you what I look for, right? I told you what I look for. Price traded underneath this low here, right? Last down candle here, what happens? Price trades through it right there. So what am I looking for? I'm looking for price to come back down and trade into this. That's what I'm looking for. What's my target? Right here, right? This up candle right before this move down right here is my target. And I just need to touch the bottom of it, right? So what am I measuring from? I'm measuring from here down to here. Not in this situation, I'm not. In this situation, I'm either going to measure from here to here or from here to here, right? So let's take this away. Take my trusty fib. Measure from the bottom of this to the top of this move. Right there. Because as far as I'm concerned, and again, I'm a little more risky than everyone else, right? But as far as I'm concerned, I'm not going way back up there, not on this move. I'm going for this right here. This is my target because this needs to be taken care of, right? Price dropped, price traded through it. As soon as price trades through it, I get my fib out and I'm waiting for an opportunity for it to enter back into it. It does right here, right? Now, you might be wondering, how am I measuring? How am I measuring all this stuff? Like, how do you know what size trade to use? Well, that's where my FX book comes in. myfxbook.com. Click on calculators. You put in the pair that you're looking for, along with how big your stop loss is in this situation. If it's right here, and I just measure in this area. When price comes up here, between here and here, I measure. Right now, it came down first before it went up, and then it went here. So it opened, went down, went up. So I'm just measuring. And you get your ruler. Measure down. That's 9 pips stop loss. What are we getting up here? If we go to the bottom of this, then that's 30 pips right there. Right? So here we go. and you give way for spread. If you're using a prop firm, then the spread is usually pretty right on, especially if you're using something like Funded Trader or something like that. If you're using your own broker, you're going to lose a couple of pips to the spread, right? But look, there's a target right there. Hit the bottom of that. Boom, 29 pips. Just like that, another 2.66%. That's if I only risked 1%. But if I'm up 18% after those 2 or 3 trades, then I'm probably risking 4 or 5%, right? Boom, hits there. And we already talked about what this was trading into your optimal trade, coming back down. So you can take that down here again. But look what happens here. Now we're at the point in New York, or the end of the London zone. So you got to start thinking about retracements, reversals, and all that good stuff. Retracement, reversals, and reactions. So when price comes back down here, this actually is the safe entry. Like I took the super risky entry. This is actually the safe entry because it trades into it right there, right? So now the measurement will be a little bit different because you're measuring from here to here now, right? Because that's where price got to. So now price comes here. You're going to enter. Boom. Comes again here. You can enter again. Here you can enter again, right? What are you aiming for, right? It comes up right there. You can enter again. Anywhere in here you can enter again. Stop loss is at the 110. So you got 1, 2, 3, 4, 5 entries, and none of them hit the stop loss. TP1, TP2, right? TP2 is right there. But now this right here was the area that we were actually aiming to get back to, because when price dropped underneath here, remember it left that opening there that needed to be mitigated. So you got 1, 2, 3, all these entries here, stop loss here, TP is here. Well, this is going to be one of your TPs right here, the 1800 candle, because we told you it's a magnet. There's going to be another TP here. This is a midnight candle. And then just above that is this gap that was left unattended, right? Just left wide open that had to be mitigated. And so boom, there it is. So you got your entries from here to here. Now when price gets back up here, what am I looking for? Same thing, right? Here's your candle, the last up candle. It is important entry. Price trades underneath it where? Right here. Price trades underneath it right here, and then it comes back into it right here, right? Comes back into it where? Again, right here. So you have 1, 2 chances to enter into this trade right here before it just completely dumps. Where's your target? Boom. There's one of your targets right there. Where's another target? Well, now we're looking for the lows. Remember we talked about already. We talked about there's another low right there, so that's another target. And then we talked about oh no, that was it right there. That's the low. We talked about this area right here that needed to be hit. Right? So that's your target. Hold that. You can leave a runner, you can leave the whole thing on, because there's no way you're risking your whole bag for the day. But that's how you capitalize on the smaller time frames, just by understanding the bias. But that's just one strategy, just one move, right? You don't have to take all the entries. You can just take one and be done with it, or you can take 2 and be done, however you want to do it. But just look, just study it. Follow what I showed you here. And if you have any questions or anything like that, you can reach out to me, right? But just see how many times it plays out. And Feel free to adjust anything you need to adjust. You don't have to have tight stop losses. You can have bigger ones if you want to. You don't have to be on the 5-minute time frame. You can go down to the 1 minute. You go up to the 15-minute, whatever you want to do. With TradingView, if you have the paid version, you can actually use the 2-minute and 3-minute and all that kind of stuff like that. But there's so many different ways. But now that you understand how to use qualitative and quantitative analysis, how to mark up your charts, you understand where the price magnets are, where the targets are, how to enter where your stop losses are, and how to get out, and how to manage those funds. That's just the start, right? So until we talk again, I wish you good luck in all of your trading endeavors.